You know that feeling? It's the first of the month, your paycheck hits, and you have these grand, ambitious plans to save. But then, the 31st rolls around, and your account is practically running on fumes. Trust me, you are definitely not alone in that. Welcome to This Explainer. Today, our absolute goal is to show you exactly how to completely break that frustrating cycle. We're going to make saving money an effortless, totally behind-the-scenes process.
So why is saving money manually just so incredibly hard? Let's be real. You get paid, you swear you'll transfer some cash to savings later, and then, well, life happens. Suddenly those funds are gone. And hey, it is not a lack of willpower. It's actually a well-documented behavioral concept known as present bias. Basically, our human brains are literally hardwired to prioritize immediate rewards, like a fantastic dinner out or a shiny new gadget, over future security. It's just how we're built.
Okay, let's dive into this. We've got a crystal clear roadmap for today with 6 steps. We'll cover the power of automation, goals and budgeting basics, choosing the right account, setting up your transfers, troubleshooting common bank issues, and finally, maximizing and adjusting your savings.
Starting off with Section 1, the power of automation.
So if willpower doesn't work, what does? Because relying on sheer willpower to save simply doesn't work for most of us. As researchers have noted, manually transferring your surplus cash actually exposes you to a whole host of behavioral barriers. Take hyperbolic discounting. That's a fancy way of saying we drastically undervalue future rewards compared to what we can get right now. Then there's decision fatigue. The more financial choices we make in a day, the worse those choices actually get. When you actively have to choose saving over spending every single time you log into your bank, well, your psychology is basically sabotaging your financial goals right from the start.
But that's exactly where technology flips the script, using what we call behavioral nudges. By setting up tools that, say, round up your debit card purchases to the nearest dollar and instantly sweep that spare change into savings, you're turning micro-contributions into completely painless habits. You can also set up separate, dedicated accounts for specific goals, like one for a dream vacation, another for emergencies. Seeing your actual progress towards clearly named goals creates a level of clarity and motivation that a giant generic lump sum just can't compete with.
Moving right along to Section 2, goals and budgeting basics.
Before we put your money on autopilot, we really need to know exactly what you're saving for, and honestly, how much you can actually afford to lock away each month. A fantastic baseline is the 50-30-20 budgeting rule, which is highly recommended by institutions like Ally Bank, and this brilliantly illustrates how it works. You allocate 50% of your income to absolute non-negotiable needs. 30% goes to your wants, and you dedicate that final 20% strictly to savings and debt repayment. Nailing down this safe-to-save amount is absolutely crucial, mostly so you don't accidentally overdraw your checking account later on.
To really dial in that number, you're going to want to follow some pretty smart budgeting steps. First off, clearly define what you're saving for and set target dates. Are you building a 6-month emergency fund, or are you trying to buy a car in 2 years? Once you know that, compare your monthly expenses against your income. Now, if you're struggling to find that 20% we talked about, think about using an expense tracking app like Finny. They're great for identifying and cutting out wasteful spending. You know those forgotten streaming subscriptions quietly draining your account every month? Catching those frees up extra cash before you even hit automate.
All right, Section 3, choosing the right account.
When you're looking for a secure, high-yield home for your cash, you generally have 3 main options right now. First, traditional banks. Think Bank of America or Chase. They offer physical branches, robust full-service tools, and even AI assistance, though they can sometimes hit you with monthly fees. Then you've got digital-first banks, like Capital One or Ally. No physical branches here, but they usually boast 0 monthly fees, incredible automation tools, and significantly higher interest rates. Finally, we have values-driven platforms like GreenFi. These offer competitive digital features, while guaranteeing your deposits won't go towards funding fossil fuels, and they even throw in rewards for sustainable shopping. So you just need to pick the one that best fits your personal priorities. But regardless of whether you go with a traditional banking giant or a slick digital newcomer, certain features are simply non-negotiable when it comes to your security. You absolutely must ensure your account has 256-bit encryption, real-time fraud alerts, multi-factor authentication, and biometric login options, like your fingerprint or facial recognition. Oh, and of course, always verify the institution is FDIC insured. That protects your hard-earned deposits up to $250,000. Absolutely no compromises there.
Now for Section 4, setting up your transfers.
Let's actually look at the technical setup. Honestly, it's a super simple process used by virtually every major banking app out there. Let's move to and see how this builds a continuous habit in 5 really easy steps. Step 1. Log into your mobile or online banking. Step 2. Navigate over to the Transfers or Pay and Transfer tab. Step 3. Select your primary checking as your From account and your new savings as the To account. Fourth, enter that specific safe-to-save amount we calculated earlier and pick your frequency. Aligning this with your paydays, like weekly or biweekly, is usually your best bet. Finally, just review the details and hit submit. Boom. You've literally just automated your wealth building.
But wait, there is an even lower friction method available to a lot of employees, and it's called a split direct deposit. This is a payroll feature supported by major platforms like ADP or Workday. So instead of money landing in your checking account and then moving to savings, you just instruct your employer to divide your paycheck right at the source. For example, 80% goes to checking for your bills, and 20% routes directly into savings before you even see it. It is the ultimate psychological hack. The money never even appears in your spendable checking balance. Out of sight, totally out of mind.
Okay, Section 5, Troubleshooting Common Bank Issues.
Look, we all know technology isn't perfect. Technical hiccups absolutely happen, especially when you're linking external accounts, so let's get you prepared to handle them without breaking a sweat. When an automated transfer fails between different banks, it bounces back over the ACH network with a specific reject code. Knowing these codes, like the ones provided by Square, can literally save you days of frustration. So if you see RO1, that means insufficient funds. You'll need to lower your transfer amount right away to dodge overdraft fees. RO2, that means the account is closed. RO3 is usually just a simple typo in your routing or account number. And R29 means your bank is blocking the withdrawal. That one just requires a quick call to customer service to authorize the connection. No big deal at all.
Now, another potential pitfall you should know about is Regulation D. Historically, this was a federal rule that limited savings accounts to just 6 withdrawals per month. And while federal oversight on this has relaxed a bit, a lot of commercial banks still enforce these transaction limits in their own internal policies. So if your automated systems are pulling money out of your savings too frequently, you could easily get hit with excess withdrawal fees. Or worse, the bank might forcefully convert your savings account into a checking account that earns 0 interest. So pro tip, always schedule one large monthly transfer out of your savings if you need to, rather than a bunch of little ones.
And finally, Section 6, Maximizing and Adjusting Savings.
Once your shiny new automated system is up and running, you don't want to just abandon it. You've got to maintain and optimize it. To truly maximize your benefits, start looking into some of the intelligent tools out there. For example, Ally Bank has this surprise savings feature where their AI actually analyzes your checking account transactions to sniff out extra safe-to-save money. It then moves it automatically in tiny increments under $25 without you having to lift a finger. Pretty cool, right? You can also look into CD ladders. Those let you lock in higher fixed interest rates for money you know for a fact you won't need for a set period. And this is absolutely crucial. Whenever you get a raise or finally pay off a debt, immediately log in and bump up your automated transfer amount before lifestyle creep has a chance to set in.
To keep everything humming along perfectly, behavioral finance experts highly recommend scheduling a 30-minute money date once a month. Literally put it on your calendar, treat it just like an important doctor's appointment you can't miss, and use that time to review your spending, check your progress toward your specific goals, and tweak those automated transfer amounts as your life and your income inevitably change.
So, the crucial point is this: relying on sporadic, manual saving is just stressful. It forces you to fight your own psychology every single day, and frankly, it has a massive failure rate. On the flip side, automated compound growth totally removes that friction. It bypasses your present bias entirely and guarantees that your wealth is quietly, peacefully building in the background while you focus on actually living your life.
Before we wrap up, a quick reminder. This explainer is for informational purposes only. You should always consider your own unique financial situation or consult a licensed financial advisor before making any major changes to your money strategy. But listen, if you are ready to secure your financial future, the absolute best time to start is right now. Go log into your banking app. The tools to change your financial life are literally at your fingertips. So, I have to ask, what financial goal are you going to automate first?